All right, welcome back to Nadlan Forum Podcast Daily. I'm Ruby, here with Lior, and today we're basically time traveling through the calm before the storm that is the mortgage market right now. Lior, it's been one of those weeks, everyone glued to their screens trying to read the tiniest blip in Jerome Powell's facial expressions. Seriously, I thought I was obsessed with this stuff, but Wall Street, next level.
Yeah, Ruby, every eyebrow raise, every "oh" from Powell, and the markets just get jumpy. But his comments this week were just, not very spicy. He didn't shift gears, didn't double down on that hawkish tone from last week. So people were relieved, even though really nothing actually changed.
No fireworks, but honestly, you could feel the sigh of relief, right? It sounds wild to say, but markets sometimes just want to hear that nobody's planning a surprise. It sort of reminds me, bit of a tangent, but go with me. I had to follow a Fed speech for my uni assignment years ago. I went in thinking, how much can one speech move the entire economy? Turns out, all it takes is a few carefully worded sentences, and suddenly, poof, markets yo-yo for the rest of the week. Didn't even need an official policy change.
Exactly. It's like we talked about a while back. When the Fed chair isn't promising anything wild, it just settles everyone down. Even if rates don't drop, investors are happy nothing's going off the rails. All week, most traders were just looking for signs Powell might escalate things. And when he kept it steady, it eased a lot of tension out there.
Yep, which leaves us what? In a holding pattern? Mortgage rates stuck because the markets are basically waiting for the next big clue. More of a no news is good news, at least for a few days.
So, to put it simply, mortgage rates barely budged this week, just a teensy bit higher. Probably not even noticeable unless, you refresh your lender's website every 30 minutes. For anyone out there thinking about buying or maybe refinancing, this kind of stability, it doesn't last forever. It's like this small, quiet window. You might want to move before the next big gust of wind.
Oh, totally. It's still way above the historic lows we saw a couple of years ago, but not sky-high panic mode either. So, I don't know, maybe a weird analogy, but it's like when the ocean's calm, a big wave could be coming, but for now, you've got this chunk of time where it's a bit safer to paddle out. Not the best analogy, but you get what I mean, right?
Yeah, makes sense. This reminds me of a client I had back in New York, actually. I think it was 2021. He was stressing about rate hikes, called me 6 times 1 week. Finally, he locked a fixed rate mortgage during one of these boring stretch weeks. Over the whole loan, it saved him thousands. Sometimes you don't need crazy moves. Just a steady market and good timing.
That is so true. We talk a lot about timing the market. Actually, we probably mention it in almost every episode. But sometimes it's these quiet moments that can make all the difference for buyers. Even if you can't get those lowest ever rates, if it's stable, you can plan, shop around, maybe negotiate a bit better. It's like little wins add up over 30 years, right?
Right. The small percentage differences, they feel tiny now. But over a 30-year loan, it's a big deal. Especially, say you're refinancing after hearing the news and you don't have all your paperwork ready. Timing can be everything. We actually went deep on this in episode 6. If anyone wants a whole rant about why betting on headlines is a dangerous game.
Oh yeah, data matters, but you can't just wait around and hope for magic numbers. Markets are twitchy, but the headline this week really is not much movement. And for buyers, that's not exactly the worst news. So, where does it go from here? This holding pattern only hangs around until the next batch of economic data, jobs reports, consumer confidence indexes, all that jazz drops. I feel like by the time you blink, there's some Fed official talking again and the whole cycle starts over. Lior, you said ages ago, it's like the market's playing hot potato with every new number that comes out.
Yeah, for sure. Everyone's waiting for that next shoe to drop, whether it's a weak jobs report or Let's say Powell hinting he's suddenly worried about inflation again. Home buyers really should keep an eye out, not just on the news, but look for those key bets like employment numbers, consumer sentiment, and what the bond market's doing. Even small hints of rate hikes or economic slowing can shift mortgage rates almost overnight.
And it doesn't have to be complicated. Set up a couple of news alerts, maybe save a site with a decent economic calendar. Just get a feel for when the market might wiggle. It's not about day trading your mortgage, but awareness counts for a lot. Don't get caught out by a surprise headline on a Friday afternoon, right?
Absolutely. And I know we say it all the time, but timing is a mix of art and luck. Just being just a little proactive, not let's check rates every second, but just staying sort of in the loop can save real money. Like huge difference between stress checking after the fact and seeing a window before it slams shut.
Agreed. The key message today is steady doesn't last forever, but you can take advantage while it's around and keep an eye out. Because honestly, by next week, we could be talking about something completely different. Lior, always love picking your brain. You make New York mortgage stories sound way less scary, almost fun.
Thanks, Ruby. Always a pleasure, and hey, next episode, who knows? Maybe we're talking about the next wild move already. Until then, thanks for listening, everyone, and have a great week.
Catch you next time. Bye, Lior.
Bye, Ruby. Take care, everyone.